on
Can I
your
record?
PC and stuff. I'll record it now and I'll send you it. It's fine. You are not aware of basic ICT?
No.
Okay. Well, I've got to tell you like 2 tools at least in ICT. And then we'll go into London and New York sessions where the algo is running.
Okay.
But this took me a year to learn ICT, and then someone came up to me and said, like, have you looked at it this way? And then it just like, my trading took a turn for the best. And then that's when I started like sharing it with others and things.
Gotcha.
Once I had the edge, I shared it like I am now. So what I'll do is I'll go and get a plain chart for now, just to show you some tools. Right. We've got order blocks that are, right, smart money buys and sells in the opposite candles. So smart money will buy in this down candle here. Have you got a small screen?
Yeah, I can see everything now.
Yeah, good. Well, when you watch it back on PC, it'll be full screen. So in this down candle, smart money bought, and then the price rallied away fast. Can you see how fast the price rallied away above this candle? So this is a sign of a buy order. So when it comes back down to it, you buy. And that's what happened yesterday. And then you can buy from here, midpoint of this candle. So that's why the market got a reaction. So that's called an order block. That's a bullish order block. That's simple ICT tools. I teach all this for free, but you've got to know it in order to like learn the algo. Okay, so then you've got, that's an order block. Price rallies away fast from a down candle. That's a bullish order block. So when it comes back into this zone, as you say, you buy it. Then you've got a bearish order block. See how price rallies away fast from this candle, the last up candle, and then price comes back into it, comes back down and back into it, and then sells off into the bullish order block. So the price goes into order blocks. It'll either go into an order block or it'll either like run stops. So I'm trying to build up the market language for you, because once you know the market language, you can read it like a piece of music. Let me pause this. Sun's coming down. Come on. I was been asleep a long time ago. Anyway.
I got two little girls, so I understand.
I'm glad you do. That's why I call it like 8 o'clock, because they should be a bed asleep, but on a weekend or not. Perhaps not anyway, he's watching his tablet. So we're building up the market language. We've got order blocks now. We've got bearish order block here and a bullish order block here. Then when the market comes up, and basically you've got to imagine loads of stops and market orders above highs and lows, and then the market basically just, this is a fib, but I'm just showing how the market makers would actually like see this high here. They would see all the stops and orders as well. So buy orders would be here, above here for breakouts. So it did get triggered here. That's a fib. Anyway, yeah, to get triggered here, and then the market would go against them. So the market basically moves from stop to stop, so highs to lows, and it's pretty simple when you see a chart. But when you're trading live, you've got to picture stops here. So the market comes down, but then comes back up to take stops, and then comes up again further to take stops. And when it comes down, it takes stops, and then you just read it like that. So taking stops is that, and it's called a turtle soup as well. So when the market takes a high here, and comes back into it, That's a turtle soup you can sell. But this is all basic ICT. It's quite advanced for retail-minded traders, but it's basic ICT. Then here, this is called a breaker. This is like one of my favorite moves in Forex. I always draw a line here because basically smart money sold in this up candle. It came down to take stops. So you see how we're building our language up. Take stops, order blocks, breakers. And it's like a minesweeper, so the market will just like, it'll see stops here, it'll go further. Then it'll come down to take stops here after what ticks or something. So the market made a high. Retailers think that's the highest and it's going to continue down, but it doesn't. It takes stops again. Then once you see all the orders underneath these wicks, basically. So you see an order here, the market comes to here. Then they're not going to go down here, where my cursor is, until the ran stops here. So if you see that the market comes up to here, and then fails to break higher, that's a turtle soup where you can sell off. And you've also got an order block at the top here where the market breaks away fast, comes back into it, you sell off. So I'm trying to build simple market language ICT style. You can go back and watch my all my free videos that go over all this anyway. So this is a breaker, a bullish breaker. Smart money sells in the up candle here, which is basically the middle of the low and the lower low. It's the middle candle, the middle up candle. And in a bearish breaker, it's a middle down candle. So market comes down, make sure it takes the stops. Once it rallies away through it, this is broken. So it's basically a 1, 2, 3. I always try and put all my ways of seeing the market in steps of 3, because that's all we can try and focus on. That's all we can really focus on when you're in the market is 3 things. If you can focus on 4, it's too much. So price take stops, that's 1. Then 2 is break of breaker. And then return to breaker is your 3, which is your entry. I'll go into better stuff in a minute, but you've got to just.
So where did you say your entry was on the buy?
I'll show you now. When it comes back into the breaker, once it breaks the breaker, and then comes back in to the breaker. Come on. My MT4 is so low these days. Close down a few windows. Right, so 1 run on stops, 2 break of breaker, 3 you buy here inside of this candle once it comes back down on top of it. That would be London close, and then the price rallies away. Take stops here. So that's the breaker for bullish. Your low, a lower low, because price market smart money sells in the up candle, runs price down, fires away fast, then comes back, and then you start buying here in London close for this one. And then try and find a because basically the market goes from breaker to order block, order block, order block, breaker. That would be a breaker on 15 minutes, but it's hard to see it right now. But to say if it was breaker, then you've got order block. Not this one here, because this one is engulfing this one. So you use the biggest one around. Because if it's like inside of a candle, so that one is not the breaker, order block. That one's not the order block. That one isn't. This one is, because this one's engulfing them all, if you know what I mean. It's the most dominating candle around, and it's the last one before the down move. That's the order block. So price comes up. Retailers try and buy in this candle because it's fast, but then price rallies away, comes back into it. It's an order block, sell off. Then I said price goes breaker, order block. So that'll be a 15-minute breaker. This down candle. I'm on the hour chart at the minute. It's easier to see. There's not much noise. So then you've got order block, and then again you've got order block. See how price rallies away from it, comes back into it, and then sells off. You got order block again. So if you imagine price goes breaker, order block all the time, and then it will reverse on a breaker.
And those are all entries for compounding.
Yeah, if you wanted to do that, you can do that. Yeah. But that's just basic stuff. Like, you see this fast move here, this would be your order block. Price respects it. This is like amazing the way you read the market like this. Is phenomenal what you can do. If it's a small one, you can join the two. Price comes back into it, fires away fast. So I'll zoom in. This is your order block. Price fires away fast, comes back into it, and then buy. So that's basic knowledge. You've got breakers, order blocks, turtle soups, and run-on stops. Simple. Now for the way the algo moves. So I knew all of that up until like 3 weeks ago, and then I got told find order blocks and breakers inside of London and New York, and it changes the game. So your directional bias is, I learned 9 and 18, but I put it to 10 and 20 just to do maths on the hour better. 10 and 20 on the daily. These are the market's heading up in an uptrend when these are split. That's the only EMAs I use, is the 10 and 20, or the maths of 10 and 20. So on the hour, it would be like, it would look like a daily. It would show me the daily EMAs basically on the hour. Does that make sense? Because the maths is right.
Mm-hmm.
So it's 480 and 240. So it's just the 10 and 20, but on the daily, but on the hour. So I don't have to go to the daily. Like, I don't use like silly small EMAs and stuff, just for directional bias, really. And on the 15 minutes, even bigger, so I can see it on the 15-minute. So I know we're in an uptrend because we've got 960, silly numbers, but it shows me the daily bias, 1,920. It's just lazy, basically. Say it's going to the daily, saying we're up. I can always just stay on the 15-minute and see that it's going up. But obviously, breaking market structure, the EMAs lag, so you can only use it in trend. You don't use it at tops and bottoms of trends and stuff like that. You can see that we're going sideways now, and we're getting ready to drop, which we dropped today. And we dropped today, I can show you, which is good. The way this works is, I can show you on gold as well. Did exactly the same on gold. If it fails to take, if you're on a Monday especially, didn't work there on gold. It mainly works on the majors, Euro USD and Great Britain USD. But it doesn't take the previous day's high by Asia and a bit after, start at London. And if we went back here, it's called a Caval block. It's a 3-bar swing inside of, so there's the block it reacted from. It's a 3-bar swing, which is basically, that's a downward 3-bar swing and a upwards 3-bar swing. So we're looking for them inside of this pink box and the blue box, which is London and New York session. So 3-bar swing is there. I'll just draw that out to today, which would be 2nd of the 2nd. And then price went into it, didn't break the high. It's never normally this far back, but they do go that far back. It's a good example. Doesn't break the high, respects an order block. I just wouldn't, and you just wouldn't now, be buying gold on this day because it's not broke the high of previous day or the week high as well. It's week's high basically. So this is the week's high. It's not broke the week's high, and it's inside of a Calvert block 3-bar swing from New York low. So the key is to look for 3-bar swings inside of London and New York highs and lows. That is how the market moves. Okay. So coming from Monday, we are here. We don't trade Mondays. We see that we have not broke the low on Tuesday. And we have a 3-bar swing inside of New York a few days prior. So we pull that right across. Price respects it. Market goes up. Then we break the high of the week on Wednesday. Market retraces into a 3-bar swing again. So it's that one, and this one, even the wicks. And then price respects the 3-bar swing again and rallies up. Then what do you think we're doing now? We're selling because price respects the high of the week and respects the 3-bar swing inside of New York close. This is called a Judas or a suspect rally here. So if we're seeing the market, we're not looking at this candle, this end candle, because this end candle goes up and down, up and down. We're looking at the past to predict the future. So we've got a 3-bar swing in New York. We haven't broke yesterday's high or the week's high. It's the week's high. If there's 3 days, out of the 3 days is the high and low. It's not broke the high. Therefore, it won't go any higher because it's getting stopped by a Calvert block, a 3-bar swing in the top of New York session. This is called suspect. Also, if you think the market's coming down, you fib the down move before the up move, this real move. Then you get your sweet spot at 70% retracement. The main thing is 79%, but it's the 62 to 79% retracement is your sweet spot, and the market sells off. This is a suspect rally. It should never have happened because the market is poised to go down. These are just retail to bring in retailers. And if we fib this one as well, which I need to delete this other fib first. High to low, the real move, you get your sweet spot again for another entry. Does that make sense? We didn't break the week's high. We're inside of a 3-bar swing in New York. This is how you need to read the market in your pull trades. This one pulls right across here. But we did break the low. So we broke the low. Did we break the low of the week though? No, I don't think we did. So the low of the week's here. Wait a minute. The low of the week's here. So the low of the week's here because it went up, up and up. So Monday's the low of the week. We didn't break the low of the week. I think this should be a sell-off, but we'll see. all in all. It's a Friday, so we wouldn't be trading. Mondays and Fridays, I wouldn't trade real cash. I'd demo it, but I would never trade real cash on Mondays and Fridays because it doesn't play the algo. So then we've got Monday again, and then we can go through it once more and over. So we've got Monday, we don't trade. This is the high and low of the week now because it's a new week. Moving forward, we've got Asia. This here is 12 midnight New York, this line. And if the market's coming down, you try and buy above this line. If the market's going up, you try and buy below this line. If you watch market maker 12.1, ICT will tell you all like pip ranges and stuff, which you can use for that, but it's quite complicated. I try and keep it simple. So we've got our EMAs going up, and we've not broke the low of Monday. 3-bar swing at the bottom of London. And we've broken the high of the week. So this move here is suspect to buy, and it goes up. So you see that it didn't break the low, and it broke the high. So the retracement here is suspect, which means basically you think like a Forex detective. If you know your trend is going up, you always fib the real move. So this is a real move, and this is a suspect, and it comes back down into your sweet spot again. Like when you know how to read the market, it's mathematically perfect with all these like retracements and everything else. It'll go up so many pips, then retrace, then it'll go up so many pips again, equal moves and stuff like that. So if you get one leg coming down, retracement, the next leg should be the same as the first leg, so you roughly know how many pips you're going to gain. Okay, next day is a Wednesday. You can see that it's broke the high, so we're looking for buys. So we've got to wait for a retracement. Boom, we've got it. We're good. There's your retracement. So it comes back down a bit and creates a 3-bar. Not inside of anything, which is okay. Just shows that the market shouldn't go lower than this 3-bar swing. Could do, but we'll see. So you could have got in there for a buy because it broke the high of the week. And we were in a buy and we made money. I'll show you this. I made this so we can clearly see it. It says Asia here, but it's more like London Open as well. But I made it Asia just for simplification's terms. So the key is to look for swings, high and low. For swing lows and highs at the top and bottom of London and New York session. So I've been going over. So this is Monday. And then Tuesday breaks the high. We look for retracement into a New York or London order block, 3-bar swing order block, which is called a Cavill block, because Cavill showed me. And then it goes higher. It breaks the low, we're looking for sells. But if it doesn't break the high, we're looking for sells. And if it doesn't break the low, we're looking for buys. So it's 4 scenarios that you just... That's simple, isn't it? Simple. Probably not first glance, but okay, so Monday's here. Monday, Tuesday, Wednesday, Thursday. So are we failing to break the high of the week? No. So we're okay. We're not in yet because it didn't break the high of the week. We can wait for a retracement. Could be a midweek reversal. There's your retracement. So you look to buy, and it continues higher for you. And then we've got a start of, that was the wet Friday, we shouldn't really be trading, but oh well. So we've got Monday, we let it play out. This is why Tuesdays are our bread and butter. That's why I made this. Tuesday is my bread and butter. Also, we've got this as well inside of the group. It's basically a yes-no chart. So has price broken yesterday's high or low? Yes or no. So say it hasn't broke yesterday's high or low. Has it respected the highs? Yes, you go short. Has it respected the lows? Yes, you go long. So it's a nice little simple process to follow. You've got 4 outcomes of answering a few questions. Okay, so this is why Tuesdays are bread and butter. If it doesn't go higher than Monday's high and by the start of London, get ready to sell. So we know for a fact it's dropped. So because it gives it away a bit with that, but it doesn't matter. We've got the swing high inside of London, 3 bar, is respected, and this is exactly why Tuesday is our bread and butter, because we wouldn't buy this Tuesday. We would sell it inside of these 3 bars. These 3 bars here is an order block, an ICT order block. If you join them together, you get the fast move down, retracement. This would be a 79% retracement. So you look at it day by day, and you trade day by day with this in mind. And where you take profits is lows and highs. We don't go for mega runs because with the algo in mind, it doesn't move like huge amount of pips because we're not on higher time frames. It's not scalping, it's day trading. We're going to just try and take the lows out because it can reverse on a whim and then take you out if you don't take your profit. So you pay yourself first.
Now, does the algo only work on the hour chart?
15 minutes we're on now. This is the algo, runs on 15 minutes. It probably runs throughout the whole Forex, but you can see it on 15 minutes. You can just stay on 15 minutes and trade from 15 minutes.
Gotcha.
Like, it's pretty powerful. So what on this Tuesday I would be on at 5 a.m., 5:30 from UK time. I would see this. So what's this called? If it's a move in the opposite direction to the daily trend, what's it called?
That's called a fake move, right?
Yeah, Judas or suspect. So where Forex investigators trying to find the suspects to get in our move. We always try and sell when it's going up and buy when it's coming down, which is completely different to what people think. We try and sell into this up move, which is into this block here, and then we sell off. Okay, so moving on. It doesn't probably help with, if I go on to the next day, I see where the market is with the lines, but doesn't matter. Price respects the low, and we've got a 3 bar swing inside of New York. We're buying. That's simple. It's quite easy to see. We're selling this one, 3 bar swing. I'm cheating as well because I already know it goes lower, but it follows the rules. It doesn't matter. Like, it's just coaching purposes. It follows the rules that you would buy within this block. Although also that's this candle here is an ICT order block. This one. and you can join them up. If there's a wiki one there, you can join them up to make it full. Price rallies away, comes back into it, sell off. Order block there as well, which I've already masked off, and price drops all in all because it doesn't break the high. So this here, this scenario is this. This scenario is this one, where it doesn't break the high inside of a London or New York capital block. Drops off. Plain and simple. Amazing, right?
You make it look so easy.
It is easy. It is. It honestly is. With this template, you've got the highs and lows of the day. You've got previous day and the week and all that. You've got London and New York sessions and everything. And you know all the once you know all the language, you can read it. You can read it.
So this is what I'm seeing right here is actually a template that you can give me and it'll automatically do that.
It'll put all these lines on for you, yeah. All time and price.
Oh wow.
Market moves, time and price. Retailers don't understand. They just buy on a M, you know, or a W. You know what I mean? Like
Right.
they don't understand the mechanism behind the M or W. The M or W is the breaker, and they like buy and sell engulfing patterns and stuff like that. And no. If time and price meet up together, then you're in for a trade. It's all time and price. It's all like the specific times that specific things happen. Like always a Judas, mainly always a Judas after Asia, and then drops. If it's a Judas down, it'll rise. You know. Okay, so we've got Friday, we shouldn't trade, that's fine. So Monday, we don't trade. And then, okay, by London, we get a break of the low. And also, I must say, you don't just get order blocks on the top. If you draw one on the bottom and it goes through it, it acts like a breaker, like a 1, 2, 3. So it breaks the structure and then comes back into it. That's kind of called like a mitigation. So they break through it and then they continue down when they come back into it. Also on a breaker, I'll just draw this one out real quick. So there's your breaker. Price runs away down to run out stops. Breaks it here, comes back into it. If you imagine the banks are putting $1 million in to take it down, even though the bigger figures are millions, $1 million in to take it down, and then breaks the breaker, and then they'll put $2 million to run it up. You want to be in on the 2 million move.
Right.
They don't care about if they even lose $1 million because they're going to mitigate the losses with 2 million, and it goes way further than the $1 million. That's basically kind of what happens in the market. Resume, mate.
Yeah, I'm here.
Cool. All right.
On my Bluetooth.
Sorry? On your Bluetooth. Okay. Okay, so Monday. I think we've just done this one. Yeah. Breaks the low. This is your Judas. Where are we? No, I've gone far too far. I'm lost now. Oh yeah, Monday. This is your Judas, or your suspect, and it's into an order block. So if the market pushes down fast and retraces back, you want to be on the retracement. So market push down fast from this move here, boom, comes back into it, you can sell off. But when you're new to it, you think like this is an order block, which in terms it is. That's why you need to know like other stuff and think like directional bias and also the way the market's moving with the algo and stuff. That's why order blocks aren't 100% sometimes. Nothing is, obviously. I got burned by these so many times when I was starting off. But better look for 3-bar swings in the top and bottom of New York, which is 1, 2, 3. Price breaks it and it mitigates it. Which is comes through it, comes back into it, comes through it here, comes back into it. Also, you've got 1, 2, 3, the top of New York. You have a Carvel block as well, so take your pick and the market drops. Lovely. So here, we're buying because we've not broke the previous day's low. Buy London. We're inside of a 3-bar swing at the bottom of New York. Buying. It goes boom.
That's crazy.
So yeah, man, you'll be catching these monsters. So then look again. We've respected the low again. We buy, breaks the high, retraces back into the previous day. We're buying, and it's just clockwork, man. Clockwork.
So fundamentals don't even matter with this algo.
Oh no. Do you know, like price is decided all week, by Monday. Before the week even starts, all of price is decided where it's gonna go.
Mm-hmm.
So doesn't matter. News is old news. Like doesn't matter. Yeah, just trade with the algo. So here, look, we're selling off. It doesn't break the high. We're selling off. Not major, but still not lost. 60 odd pips. Looks like a small move, but yeah, 60 pips. That little move. These ones are crazy. Like you would get in, you'd break the high here. You'd get in off the midpoint of this block here, so you'd get in around about here. You close out the end of New York. Go away. There we go. Which is there. So that's 100 pips. Just there. So here's probably a losing day, that's fine, but the market's probably just coming down. Take stops here and continue higher. The next day won't break the low of the week. So yeah, we probably lost on that day, which is fine. Although if it does break the high, don't look for a sell. Okay, just wait for this to come right down into your block there, and then buy it. And this is why I say just try and take out close highs and not be greedy, and you'll get your fill. And then the market comes up and you get 72 pips, but you've got to wait a while for this one. But just do something else, you know. You can put an alert like somewhere. If you see a block here and the price is coming down to it, just put an alert, and you can send alerts to your phone as well through notifications.
Oh, I didn't know MT4 could do that.
Oh yeah, yeah. What you do is you you got your alert settings. Instead of going to sound, you go to notifications. You can put in like what text you want. So buy at CB Carvel block, and it'll tell you what pair it is anyway. You go to test, or I'll go to test. So I tested that out, pressed OK. I just got a notification on my phone. I don't know if you heard it. But what you do is you go to options and you go to notifications, and that is on your MT4 on your phone. That code, put that code in, and it links your MT4s up. So you can set alerts to your phone, or you can set sounds and stuff. So like instead of a notification, you can set sound, which I haven't actually give people these sounds, which are handy to have because I get sounds like this.
Price alert, Aussie CAD.
When it hits a certain level, or if I put it on my take profit, I get this one. And my trade's closed. Or I've got this one if it's in danger. Well-known sound from Metal Gear Solid.
Mm-hmm.
So I don't like hearing that sound. It's near my stop loss. And then I check my spread to see if they're going to spread me out. Buggers. Anyway, so yeah, we broke.
So this one right here that you were just pointing to, it broke the previous day's high, but
Yep. So we're looking for a buy, and this is all suspect for the buy inside your block. With the algo, but you could sell off a turtle soup, but try and only trade one thing at the first anyway. Turtle soup's the high. So, but it all links in. Alright, so we've got Monday. This is why.
So you probably only trade one pair.
Like 2-3 max. My favorite one's Great Britain AUD because it moves like crazy pips.
Yeah, because with this algorithm, you know, because people trade like a whole bunch of different pairs, but with this,
you don't need to.
Yeah,
you don't need to. I'll show you something compound wise. This is crazy. Like if you just traded 3 pairs every Tuesday for a full year, it's absolutely insane. So this is Hype Money Calculator. It's my Forex stocks. You go on Hype Calculator and you find the my Forex stocks calculator, and you put in $100. This is like why your Tuesday is your compound machine. We can just trade Tuesday. I know a guy who just trades Tuesday with one of his accounts. So he just uses it as like an investment scheme, basically, like a Ponzi investment scheme that you get online where you get so much percentage back. That's how accurate it is. You use it like that. I need to start doing it as well, to be fair. $100. Say you're 6% gain on each trade, so that's 12. Or just say 10%. 10% every week, just one pair for a whole year. Only $100. 10% is 11 grand. So you make 10% that day on Tuesdays, trading 2 pairs. So if you put that to 1,000, start off with 1,000, and you're only trading Tuesday for the whole year, you can make 100 grand.
Wow.
It's crazy. Just trading Tuesday. So it broke the high. And this is why. Because it breaks the high by Asia. I'm on by 12 o'clock midnight. This is all seen as suspect. Every move going down from now on, suspect.
Now, when you're looking for the break, are you looking for are you looking for a wick or are you looking for a close?
Preferably a close. Preferably
Okay.
a close. But it does it a few times here, so that counts. So then we get the respect off the order block. Price rallies away. And then we didn't break the low of the week. We broke the high of the week. So any move going down now is suspect. There's your suspect. We can now buy this move.
So you a buy right there.
Yeah, man. You know it. Right there off that. So you've got your caval block, 3 bar. And then you've got your order block there. 1. You got your order block there. 2. Down candles. Up move fast. Up move fast. Again, you got an order block there. So you can see where the orders are in. The main order of the bank is here. And then the little orders are here. Main order is a 3 bar swing at top and bottom of New York. Then you've got your order block, order block, order block. That's what I was saying. Market goes breaker, which is here. This candle, smart money, sold in this candle, moved the price down to take stops below here. Doesn't have to take the wicks, just take stops below the bodies. Boom, touches it, price rallies away, breaks the structure, breaker, comes back into the breaker, and then off we go. Boom. And then we breaker, order block, order block, order block, order block, order block, order block, all the way up. And then it breakers again, reverses, and continues on. To run stops here. And this day ran the high, retracement into a caval, boom, buy. This is like printing money, man, once you get onto this. Insane.
I can't wait. I'm gonna play with it tonight. I can't wait.
Yes. What I've got to as well get you into, I've only just started getting into it myself, is a Forex tester, which you can actually buy and sell on. It's called FX Blue. I'm going to make a video on how to set it up and stuff once I've got it up and running properly. You can basically buy and sell a fake account inside of MT4 with a Forex tester, so you can like trade like a whole month in an hour testing this out. Well, you know your Forex strategy tester on Forex.
Yeah, you said you could trade a whole month in an hour?
Yeah, not real money, but just testing, back testing, real data, which prints out for you.
Oh, so a demo account.
Yeah, it's like a Forex tester, but you can buy and sell as well. So you can actually get an idea of how much profit or losses you're going to make off what you're doing, instead of just not being able to buy and sell on the Forex strategy tester on MT4. You can do that on this one. You can buy and sell. Monday, let's see what we've got here. We've got Monday. We don't trade Monday. I'm aiming for a 4-day weekend, trading 3 days a week for like an hour a day. That's not going to be my strategy. Like,
that's an awesome strategy.
It's going to be not strategy, but it's going to be my time scale, you know.
Yeah, you only work 3 hours a week. That's awesome.
Yeah, not even that. Like literally, I'm in work at 7 o'clock. I'm up for 5:30. I get on the chart. I look for 10 minutes, and then I place my order, and then I go to work and just manage it once in the day, and then I'm done. I don't do nothing.
Right.
It's crazy. So I want to see Monday play out. Then Asia just wicks it, that's not a break. Respects the low into a candle block, we're buying, goes up. And it's cheating, like, because we know it's gone up, but it doesn't matter. It's like just testing out. So here, breaks the high. Gotta wait for it to break the high, or break the low,
So
or
you would,
respect the high and respect the low.
you wouldn't get in down there because
Down
you
here,
had your no before that.
here.
Like you're down there, yeah.
Oh yeah, definitely. There's a swing. I didn't draw it. I just there's your order block. There's your respect. Boom. Yeah, you get in. Take the highs. Crazy. Printing money, man. Now 100 pips easy on that day. Easy. Tuesday compound. Right. Next trading day. Again. Just wait for ages to play out. That's a respect again. Respects the low. Wait for this move to go up. You can do that. Any retracement. Retracement here. Get in here. Off your order block. Also, we've got 3-bar swing in the bottom of New York. Cavill. Buy. Price rallies away. And then what are we doing? What are we doing on this day?
Is that Friday? You're not trading.
We're not trading, yeah. But if it wasn't a Friday, what would you do? You'd know, obviously, because this is a line below. But you'd sell this day because it respects the high.
Mm-hmm.
Boom. If it respects the high by London, you're good. Look at that order block there. Fast move away from the green candle. Down we go.
Sell off. How many pips is that?
That's today. That was
That was
100. That was like 90 pips.
90.
Let me see something. I don't know whether it's this account though. That's shit. Closed off it too early, didn't I? I was in it, but I closed it off too early.
I did the same thing on gold. Gold went 200 pips and I closed it off at 70.
Yeah, that's good though. 70 pips is good. 70 pips is greedy in some people's eyes. But that's good. Right, so gold. Let's see what happens in gold. Monday, Tuesday breaks the high, doesn't it? This is all suspect. Rally off, boom, buy. Breaks the high. The suspect rallies down, buy. Breaks the high. This is a losing day. That's fine. You could see a fast rally down your order block here. You could sell it there off ICT. It's insane. How does gold move? How many pips is that? Is that only 216? Because it's a digit.
I caught 70 of that.
Cool. How we played around this before. So Monday's here. Tuesday breaks the low. So we're looking for a sell. There's your 3-bar swing inside of New York there. So we're looking for a sell. And against us, 44 pips. So, I mean, we need a bigger stop loss, don't we, on gold? Because it's normally a 33 pip stop loss. But with it being gold, 40, 50 pip stop loss. So 50 pip stop loss is here. You wouldn't get stopped out. You would have made money then. So all this is, once it breaks the low, all this is suspect. As I teach this more and more, I just get more and more like aware of it as well. So price doesn't break the low. Oh, wish it didn't have highs and lows on the day, but it doesn't matter. There's your order block. You've got one in there as well. But all it sells off. You know that if price, could you have bought this one, but it doesn't break the low? Yeah, you could have bought and sold with this. So if you got on here, no, I don't know. See. There's your order. No, you probably would have bought that and lost because it didn't break the low. But yep, it's a losing day. Who cares? That's Forex. Use this. No. All right. Let's get that. Right, so let's see what Tuesday does. Oh, we can't. We haven't got much data. So this was a Tuesday. Price breaks the low, wait for suspect. Sell off. So this one here is it's this one. Breaks the low, traces back into the Caval block, and down we go. It's there on gold. Lovely. If it breaks the low, any move up is suspect. If it breaks the high, any move. Sorry, if it breaks the low, any move up is suspect. Yeah, if it breaks the high, any move down is suspect. And you just look. Excuse me. You just look for your Caval blocks or your order blocks, whichever. Mainly Caval. And then if we go to Euro USD, I've got a video called Trend Traders Trio in there as well, which uses the 1, 2, 3 method, but not the breaker method. It's a 1, 2, 3 method. It's not a breaker method though, because I always trying to keep everything to 1, 2, 3. So it's 1, 2, 3 breaker, but then there's 1, 2, 3 trio and 1, 2, 3 pass of the 4 hour. So if we're going up on the daily, you would have EMAs here normally, like going up like this. This is just a blank chart for cleanness sake. Oh, let's just do it on this chart. Right. So, come on, man. Right. We're going up on the daily from, say, here. So we're going up on the daily. That's one of the trio. That's one. Then you go to 4 hour chart. I think this confuses things really, but it helps as well. Once you know the algo and you can read it on the 15-minute, you wouldn't really need to do this, but it's confirmation. And it basically when the candles price passes a down candle, I see it's becoming a buy candle, and then price goes up. So when price, so basically on this up move, you wouldn't look for sells until it breaks the up candles. It doesn't break the up candles. Like, it may wick a bit, but it doesn't break and close. It never does, all the way up until here. So you get a close of below a green candle, which means When it comes back up, you look to sell because it's broke the green candle.
Mm-hmm.
So you wouldn't be selling all in here until we get a break of a green candle. This is better on higher time frames. This is a 4 hour. As you can see quite clear that you just wouldn't sell this market because it's not broke a 4 hour candle. So you're all right. You can just look for buys. Order block, order block, order block, all the way up. So you got your order block there, hourly order block there, hourly order block there, hourly order block here, hourly order block here. See, boom, comes down, draw them out. This isn't a trend true, but I'm just trying to help you see that price just moves like order block, order block. Also, doesn't break the low into a caval, and breaks the high, retracement, boom, breaks the high, retracement, boom, doesn't break the low, breaks the high, retracement, boom. And it's just like constant, repetitive market, which you want, really. So if whoever says price is not predictable, then they ain't got a clue what they're doing. It's very predictable when you know what you're doing. Yeah, I'm having difficulty moving these around with all these lines on and stuff. So let's just clean this off. You get the gist anyway. There's an order block there. Press to the pip. Boom.
This seems like it'll be a lot less stressful on me.
Of course, of course. So
you trade London. You know, how well is it work in New York?
depends if market doesn't set up in London, it'll set up in New York. But this is how you trade it from London. I mean, New York's probably easier because, I mean, it's a good question. Because you've already got more data. New York's normally a continuation of London.
Mm-hmm.
So you've got London up, New York retraces continuation. So yeah, you can trade it. You just look at the data, like where's Monday? We've gone up in London. We continue in New York. Breaks the high of the week.
Where are the lines that tell you what session it's in?
Here and here. London, New York.
Okay.
Also between, like this, so the top of London and the bottom of New York respects very well. Boom. So yeah, okay, so how do you trade New York? You see that it's not broke the high.
Mm-hmm.
You see that there's a caval block here. You see that London's come down. You wait for your suspect inside of the caval block inside of London, and then sell off here, which is past New York, but still, you're in. I want to show you.
Those seem like very small. The line seems small for it to be a full session, right?
Yeah, these are zones. They're not sessions. Like they're not full sessions. Sessions
Okay.
overlap. Sessions overlap. These are zones. London and New York zones, but it's like the start of each session type of thing.
Okay.
Because that's where the orders are and the free bars. It took me a whole year, man, of my trading to discover that. There is a big breaker. Get your low, lower, low breaker, breaks the structure. And if you go on the daily, that's amazing. Huge money maker. Once you're in there, you can hunt longs for a while, like to here. It belongs to like there at least. So you've got like 63 pips. Not bad. It's a hump long continuation. I need to show you the three-step system breakdown. I've got all these recorded videos as well, but this is going to be recorded for you. So we're going up on the daily, go down to the 4 hour, cross of the 4 hour, we need to cross up the 4 hour. Then it's a close of the hour, confirmation, and then a retracement after 15 minutes. So we can choose one from here. So choose this one here. No, I won't, because it won't go back and data that far. Choose this one. So it crosses the 4 hour, go down to the hour, and then it closes on the hour there. Then you can see the retracement on the 15 minute already, this candle, into your block. And you buy. Sick. So it's a 1, 2, 3, it's a 4 hour, 1 hour, 15 minute. 4 hour break, 1 hour close, 15 minute retrace. And then once you've got one of those behind you, you've got that behind you, the 4 hour close, it's a 4 hour break, 1 hour close, 15 minute retracement, and you're in this trade. You can either take profit here or hold. But then if this next day, breaks previous day's high, you're on to a nice buy because you've broke a 4 hour structure here, candle, and then it continues higher. So this is an amazing, perfect day to buy. So what you do is you wait for the retracement either here or here. These moves here and here are seen as suspect. There's your order block. So you get in at the end of London and then away you go to take 31 pips out of the market, which is nice. But you're already in here as well off this move. Let's do that again. It's funny though, most people in the world will never ever see the market like this.
It's crazy.
It's quite phenomenal. Break of the 4 hour. So you go down to your hour. Close of the hour. Confirmation. Retracement at 15 minutes. Boom. Retrace. Even if it goes, it's closed on one of these. It doesn't matter. Retrace on the 15 minute. Into a mitigation. Failed order block. A mitigates to buy. You've also got a breaker. Low. Lower low. Also you got failed to take the low again, but I can look into that. Low, lower low. I put my line here. Give it a little tick to say that it's ran stops. So when it breaks this candle, which it does there, it retraces, I can buy, and I buy. Boom. That's a New York trade. Buy. Boom. So when you say like, how can I trade it in New York? I don't really have an answer to that, but because obviously price is different all the time. But you just look what happened in London for a setup. So if you see that it's broke previous day's high, you would look for, like I said before, below the green line here, you would look for buys below here. So you see the market's working below this line, boom, 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 boom. It's working it, bringing in orders, buy, sell orders, and then boom, takes it up. This is all. So what price does as well, I've got to talk about, is price will accumulate. Even if Asia's up or down, it's still accumulation in Asia. So accumulation, manipulation, distribution, A, M, D. And then again, look what we've got, A, M, D. A, M, D. Then we've got.
So you probably never have any drawdown.
Oh, sometimes, but it gets less and less when you get more and more into it. Like, this is, this one is accumulation, expansion, reversal. This move, accumulation, expansion, reversal. This one can be accumulation, expansion, retracement, expansion. So that's it, really. That's how it moves. It's just like accumulation, expansion, retracement, expansion, or accumulation, expansion, reversal, or AMD. AMD is most popular. Accumulation, manipulation, distribution. Accumulation, manipulation, distribution. You can see on the hour, on the daily, it's open, rally, decline, close. Open, rally, decline, close. And you can see it probably better on the bar chart. So we've got your candle open, rally down, up, close. Here we've got a reversals, a sell-off, open, rally, decline, close, open, rally, open. This is your suspect. So it's A, M, D, A, M, D, but then it comes back down. So you still could have made money here because it's A, M, still goes all the way up, take highs, and then closes lower. A, M, D, A, M, D, closes lower. A, M, D. Does that make sense? Accumulation, manipulation, distribution, daily. It's a lot to take in first, but go back and watch this video a few times. You'll be powerhouse traders. So we've got accumulation, expansion. So you wait, the retracement, then you get in. You see it's broke the low, you're selling off at the top inside of an order block. Here, look. There's your order block. And yeah, you're right. You hit these order blocks, sometimes you like it's to the pip, like that one's almost to the pip, and then boom. So we just work off one candle, like on a 3 bar swing mainly. But an order box we work off 1 or 2 candles which are together. Here we've got high, higher high. This is your breaker. Price goes through it, up into it, sell off. So now you're more like familiar of the market language. You got order blocks, breakers, till soups, the way the market moves, accumulation, manipulation, distribution. If you have all this in your head, you can just go onto the charts and then be like, oh, Asia accumulated. It didn't break the high. This is manipulation. Oh, what's going to happen now? Distribution. You sell. Boom. Boom. That's it. You're now a Forex pro.
That's crazy. I can't wait to get home and start playing with it.
Yeah, it's going to be fun. It's going to be fun, man. What you need to do is chill out on Monday and then be ready for Tuesday. And then you'll be good.
So you're going to email me the template?
Yeah. Give me your email. I'll send you all the indicators. What I'll do is I'll shut this off. Gone through pretty much everything now.